Hello everyone, this is Dana from NexGen. If you have not done so, please make sure to like this video, subscribe to the channel, and hit the notification bell so you don't miss the valuable nuggets the team has for you. In part 1, we showed the difference between interest paid and interest earned. In part 2, we went over the roles of a bank and a credit union. Today, in part 3 of Building the Family Bank, I am going to discuss the importance of credit. But what is credit? Based on this definition, credit pretty much is keeping your word. In part 2, I said there were 2 types of debt. The reason I'm talking about credit is because there are 3 credit bureaus that tell the world whether you can keep your word. Most U.S. consumer credit information is collected and kept by 4 national traditional consumer reporting agencies: Experian, I remember them as TRW, Equifax, TransUnion, and Innovis. These organizations are for-profit businesses and have no government affiliation. Consumers are entitled to a free annual credit report for each one of the 3 national consumer reporting agencies: Equifax, Experian, and TransUnion. Consumers can go to annualcreditreport.com, the internet site maintained by the 3 companies, to get their free report. Credit reports help lenders decide if they'll give you credit or approve a loan. The report also helps determine what interest rate they will charge you. Employers, insurers, and rental property owners may also look at your credit report. You don't know which credit report a creditor or employer will use to check your credit. The reporting agencies may have different information. That's why all 3 should be checked at least annually. My bank and credit union offer a free credit or FICO score. They update it monthly. The credit and FICO score are different. The FICO score is calculated from the details in your credit report, including your credit history and record of past payments. The score is made available to lenders, landlord, and others to assess if you're a financial risk. It's important to pay your bills on time and in full to maintain a great credit score, as this can affect your ability to secure a loan or even rent an apartment. While there's several credit scoring formulas, the FICO score is used by 90% of the country's top lenders. Scores range from 300 to 850 and are often categorized by quality, such as good, fair, and poor. As such, scores under 580 typically indicate a very poor credit, and scores above 670 demonstrate good, responsible borrowing habits. Scores range may vary by lender. Now, the payment history has 35% as far as the weight is concerned. The amount owed is 30%. Credit length history is 15%. Credit mix is 10%, and new credit is 10%. Whether or not you use the family bank, it is important to check your credit report to make sure the information is accurate and there is no fraudulent activity. Remember, one of the wealth moves is keeping your word. Thank you, and I look forward to seeing you in part 4. Don't forget to like, comment, share, and subscribe.